Hello, I'm Peter Towers. Welcome to the webinar for our subscribers, Differentiating Your Firm, Getting Ready to Deliver New Services to Clients. And I really trust that some of the matters we're going to talk to you today about will encourage you to be offering a broader range of services to your clients. Where would you start on getting ready to deliver business advisory services and additional products to your clients? Well, I think you would start with the training package, and then you'd look at identifying clients that fit within various categories. So we've got budgets and cash flow forecasts. Within ESS BizTools, you have material for retailers, which will assist you to guide your client through setting their sales mix to achieve a targeted profit. With trades or contractors, we have a product which will help you to determine charge out rates, your material markups, looking at the productivity percentages of your employees, with everything gelling to achieve an overall targeted profit. The next area we have in budgets and cash flows is looking at professional firms, helping to determine charge out rates, the productivity targets that you would need for each individual team member to achieve an overall targeted profit for your business. So there's some activities that you can start by utilizing ESS BizTools to work with those three major business groups: retailers, trades or contractors, and professional firms, to ensure that they have set their budgets right, they got their charge out right, they understand what their overhead expenses are, and they have determined a reasonable profit, and then they are charging enough for the product or enough for their time and labor to be able to achieve that profit. The next area I want to talk to you about is within debtors management. Debtors management training is a package within ESS BizTools. And the key item that you're looking for here is debtors days outstanding. Are you calculating debtors days outstanding for each client as they are processed? You'll be doing some of that work now or shortly for the year ended June 18. Any debtors days outstanding in excess of, say, 40 days? Why not talk to your clients about conducting a debtors management review with the client and establishing systems whereby you will be able to contribute to reducing their debtors days outstanding. And this can save your client a considerable amount of money in cash flow. And the other product that you have available to utilize is the SME Debtors Systems Manual, which will enable you to then do some editing to the template so that you have a customized debtors system to suit the particular client. So that's another group of clients that you might look at in offering some additional services. The next area I want to talk to you today about is the Personal Property Securities Register due diligence system. This can apply to clients who have consignment stock out on consignment to businesses all over the place. Now, if they've only got consignment stock out to 10 businesses and it's only $100 on each occasion, it's probably not worthwhile worrying about registering those individual businesses on the Personal Property Securities Register. But if they've got 100 businesses that they are consigning stock to, and the average value of the consignment stock is $5,000, well, that might be a different position, especially if 20 of those businesses are owned by the one company. Therefore, they've got a potential exposure there if an unfortunate event occurred of $100,000. Would that worry your client if they lost that money? The next scenario under the Personal Property Securities Register is stock stored on someone else's premises. Now, a lot of businesses do store stock on other people's premises. They've really got no idea what the financial position is of that landlord. But if their stock is stored in someone else's premises and they have not registered that landlord on the Personal Property Securities Register, then they are potentially able to lose that stock if a liquidator, a receiver, or a trustee in bankruptcy is appointed to that landlord. Assets on someone else's premises. Now, these could be motor vehicles, boats, aeroplanes, plant and equipment that's been stored on someone else's premises with no agreements. There's potential problems there. Now, if they have entered into an agreement for under 2 years, they do not have to worry about registering. But if they have entered into an agreement which has got no time limit, so it could go for any amount of period, they are in a potential problem area. And if they've entered into a 2-year agreement that's got an automatic extension, once the time period goes beyond 2 years, if something happens to occur to that lessee, then your client, as the owner of that asset, could lose it. So it's worth raising the question and having a conversation with your client, and in many instances, getting legal advice. And preferably, all this should be done before the agreement's been entered into by your clients. Another area that can be of interest for some of your clients, in particular areas of Australia, so if they're in the farming areas or indeed a business that is supplying goods used for growing crops, things like seeds, fertilizer, pest control. That investment that your client has in their farmer customers is able to be registered on the Personal Property Securities Register so that they have some protection if something goes wrong in that transaction. A similar type of protection applies for supplies and feed that a business has made available that the customer is using for their livestock. Protection can be obtained by registering that customer on the Personal Property Securities Register. And then we turn to trades and subcontractors, because this is a huge problem all around Australia. And that is for businesses that are receiving progress payments. Those businesses could encounter some problems with liquidators if, in a very unfortunate event, a liquidator is appointed to the builder or the principal in a contract, and that builder or principal has been paying progress payments to your client, then a liquidator may allege that your client has received a preferential payment. Now, you can suggest to your client that they go to court and fight the liquidator. That all costs time and money and causes a lot of stress and anxiety. And that basically could be avoided if your client had planned beforehand, perhaps with your input, that they should have registered that builder, that principal, in other words, their customer, on the Personal Property Securities Register. Now, I know there might have been some problems in getting that builder or principal or customer to sign the terms of trade agreement and the retention of title agreement that is very necessary if your client was going to register that customer on the Personal Property Securities Register. But perhaps if their customer wouldn't sign those documents, your client should have been thinking very carefully about whether they wanted to enter into this transaction with that particular builder, principal, or customer. Now, if it's a government department, obviously no concern. But if it's a medium-sized company or even a very large company, and depending on the amount of money involved, your client probably should be very careful, making some inquiries, satisfying themselves that their potential new customer has got a good reputation. They haven't got a history of folding companies, Phoenix-type operations, before they enter into the contract. Succession planning is another very important area that you could be offering services to your clients. Who would you target? Clients who are approaching retirement age. What are they doing? Have they already planned their succession? Have they been developing other members of the family to take over? Or have they got team members in their organization who have been trained and mentored in undertaking a more important role? Are they going to be able to get enough money out of the business to retire? There's a whole range of questions. And within ESS BizTools, you have a full product package which will guide you through the succession process. Are you using it? Business planning. Well, business plans are like maps for tourists. If you don't know where your business is going, how are you going to know when you get there? And more importantly, how are you going to be able to conduct reviews during the year to see where you are on what your original plan was? So who might be a target for a business plan? Owners, directors, management who are wanting a written statement of where they plan to take the business. And very importantly, anyone who's wanting to raise capital or even loans will need a business plan. Most definitely if they're trying to raise capital as crowdsourced funding, Section 708 of the Corporations Act, or as an early stage innovation company. They will need a business plan. You must have a few clients in those categories. Another area where within ESS BizTools you have a full package to assist you is buying a business. Now, because the baby boomers are starting to retire in Australia, there are literally thousands of businesses for sale. If you have a client who's interested in buying a business, there is an opportunity for you to be able to conduct due diligence on the businesses that are being offered to your client to buy. They will all need proper reviews first to determine how good a business it really is. Which one do you select to recommend to your client? Crowdsource funding companies. I'm amazed that a substantial number of accountants still don't understand what is happening with crowdsource funding companies. I've had people talk to me about it as if it's raising money to pay for a funeral for some person that's been killed in an accident. It's not. This is for companies to be able to raise capital. The guidelines are the company must have a turnover of under $25 million. and the company must have assets of under $25 million. The company would want to expand or develop their business operations, and they need capital. So this is an alternative to pledging their house on a second or third mortgage or borrowing on their mother-in-law's house from a bank. If they've got a worthwhile business, I think you should be seriously talking to those clients about, do they go to the market and utilize the system that the federal government has put in place to enable those companies to raise money. Now, if they want to do this today or next week, or perhaps even for the next 6 or 7 months, they will have to convert from a private company to an unlisted public company, because that is the current legal position for crowdsourced funding companies. Now, that's not a really big deal. The Australian Security Investment Commission's made it fairly easy. It costs $78 to convert from a private company to an unlisted public company. Sure, they'll need 3 directors, but I think they probably need that many, at least in any case, if they're going to raise money from the public. And there's a certain other rules, but they're not that onerous. But the government has currently got legislation that's in the Senate, and hopefully it's going to be decided on over the next couple of weeks, to enable a private company to be able to raise capital as a crowdsourced funding company. So in other words, if it complies with the rules, and that's what they are, what I've got on the screen there at present, without having to convert to being an unlisted public company. The expectation in the marketplace is that this market of private companies being able to raise capital will be quite substantial. In fact, one expert player in this market of raising capital traditionally for private companies, basically under Section 708 of the Corporations Act, believes that this market by about 2021 could be worth around $1.6 billion capital raising per annum in Australia. Now, their estimates are based on what they know about what's been happening under Section 708 capital raisings, but also what has happened in New Zealand, the United Kingdom, and the United States of America and Canada, all of which have had crowdsourced funding equity raising for 6 or 7 years. Once again, Australia is playing catch up. But there are some tremendous opportunities in this crowdsourced funding equity raising market for proactive accountants. Do you realize that the vast majority of the businesses that are probably going to try to raise this capital are probably clients of small to medium-sized accountancy firms? They won't be clients of the Big Four or even the so-called top 20 accounting firms. So why let them get the cream? Why not show your clients that you're proactive in offering this service to them? Each of these clients is going to need a business plan, a budget, a cash flow forecast, an information memorandum. The company's going to have to be valued. There are some substantial fees at stake in this sort of process. Our estimate, $25,000 to $50,000 would be the range for those services. It's worth thinking about. And your clients will benefit because they already know you. But you will need to convince them that you know what you've got to do, that you're able to offer these services. And we've got all of that covered within ESS BIZTOOLS, within the products that if you're a gold or silver subscriber, you are currently subscribing to. I just want to encourage you to use that material to earn fees and to satisfy your clients. And the next new product that I want to talk to you about, it's not that new anymore. This has been available to use since the 1st of July 2016, and that is the Early Stage Innovation Company. How many of your clients have you, first of all, talked to about this? But hopefully you've been able to assist a few of your clients go through this process. Because this was deliberately put in place by the federal government to assist people who had developed new technology, new processes, new services to be able to raise capital. And they put a carrot into the legislation to encourage investors to seriously look at these types of entities. Now, in the main, the company will be under 3 years of age, but in some cases they can be up to 6 years. That's covered in your material, so I'm not going to go through it today. The turnover in the last financial year has to be under $200,000, and that's a group turnover. Same with the expenditure. The group expenditure has to be under $1 million. And the company cannot be registered on a stock exchange anywhere in the world. Now, these companies will normally have developed a new product, process, service, organizational, or management methodology. They've developed something. Some of them will have spent a fair bit of money in research and development. Some of them may have already been in the Accelerating Commercialization Grant Program. Some of them may have already raised in excess of $50,000 from arm's length investors. And yet others may be at the very beginning of this journey. They've got a great idea, they've got a prototype, and it can be supported that it's got some real future in the marketplace. But the big stumbling block, and the reason the government introduced this legislation, is that many of these businesses fail in Australia, unfortunately, because they do not have access to money to commercialize their invention, their product, their idea, their software, whatever they've developed. And that's why this legislation was introduced. So if you've got clients in this category, they're smart, they've developed something, and I was about to say they're young, but I've had some clients well into their 70s who have developed new products and processes. In fact, one guy was in his 80s. So age doesn't really play a part here. Some people have got ideas in their head that they've had there for years, I've discovered. And then when they get some more time on their hands, they get frustrated with their golf handicap and they sit down and invent something. And then they wanted to get it to the market quick because really time is marching on for them. So just don't look at young people, look at the full spectrum of your clients and say, well, who is developing things? How do you find that out? Run a seminar, send out a newsletter, and that's all in the material that you've got within ESS BizTools. So these clients could be a potential for early stage innovation company. Now, I said earlier that the government had deliberately made this legislation so that it would be able to offer carrots to investors to get them to invest their money in these companies. So there's a 20% tax offset to the original investors. There is a limit. A retail investor can only invest $50,000, absolute maximum, in a 12-month period. Therefore, the rebate is $10,000 maximum. A sophisticated investor can invest as much as they like, but the maximum rebate, calculated at 20% of the investment, is $200,000. So if they invest more than $1 million, they still only get a $200,000 tax offset. But those original investors also receive a capital gains tax exemption if they hold the shares for longer than 12 months and less than 10 years. And all is not lost at the end of 10 years, because at the end of 10 years, the company is revalued, and that becomes the new cost price for those investors that have stayed on in the company. Have you got any clients that fit this category? Let me make an observation. For 11 years, we were contractors for the COMET program, Commercialising Emerging Technology. There are only 12 of us in Australia that handle that program, and it's the forerunner to the current Accelerating Commercialisation Grant. and probably one of the forerunners to this legislation. And what I found when I was talking to inventors in the COMET program was that many of them had never been to see an accountant, or if they had gone anywhere near anyone for advice relative to taxation, it had been to a tax agent to get their tax return done, because a lot of them were not running businesses at that stage. They were inventing things in their bedrooms or their mother-in-law's spare room or the garage at the back of the house. So my point is that you may have to do a bit of checking, of asking questions, running seminars to really find out which of your clients are actually doing things. And some of them might be a bit reluctant to tell you too much about it. That's okay. They're all very much aware of protecting their ideas with patents if it is something that is patentable. But it's an interesting area for you to get involved in with your clients, and all the material is available within ESS BizTools, gold and silver packages. Chief Financial Officer Services. I think there's a tremendous opportunity for accounting firms to offer virtual CFO services to your clients. I've got a client in the outer Sydney area that's generating $125,000 per annum for the firm by offering a virtual CFO service to a client. It'd be nice to get a few of those, but a lot of the assignments are going to be a lot smaller, but they could be $10,000 to $30,000 per annum for running a virtual service, only going to the client's office every couple of weeks, checking on a few things, doing most of it via email and computers. Think about it. But who would you target? And that's really the whole theme of what this webinar is about. I'd be targeting any business, doesn't have to be a company, any business with a turnover over $2 million. You might pick on some that are only $1 million, but my suggestion would be $2 million. If they're in that category, they're growing, and they may be very happy to have you knocking on their door and talking to them. Remember, a lot of clients think that all that accountants are there to do is to prepare income tax returns. You have to do the sell job on them to convince them that you can do this work. If they're a company that's wanting to raise capital, well, they should be very much in the mindset that they have to have a chief financial officer service. Most companies are going to raise capital, are not going to want to spend a lot of money on a full-time CFO unless they've got sufficient work for that person to do. But a lot of them won't at this stage, but they want a good financial management system. Because invariably, if they start raising capital as a crowdsourced funding company, they'll need a chief financial officer, or as an early stage innovation company. They are going to have external directors appointed to their boards who will be demanding that they receive prompt, accurate financial accounts with analysis with those accounts, some indication that someone has done some digging down into those accounts, costing records, break-even calculations, management reports, ratios, key performance indicators, benchmarking type comparisons. That's the type of information that experienced directors want to see. And really, so should your clients. But they'll need your assistance, most of them, to understand what all that means and how it fits together. And the third group that I've got there is people wanting to run a sound business. They really don't want to be worried about the financial side, but they know they don't know enough, and their bookkeeper doesn't know enough. Have a yarn to them. If they're keen to run a very sound business, their turnover might only be $850,000. But if it's a profitable business and they don't want the worry, they could be a prospect for a CFO service. We've now started to operate ESS BizBrief. Every week we are uploading a commentary and a short 3-minute video on an aspect of products within the ESS BizTools product range. We're doing that so that we're alerting our subscribers that these products exist. So the first one was on debtors management, and I've raised debtors management here today. The second one was on personal property securities register, and we've also discussed that today. The third one was the early stage innovation company, and we've got 2 briefs. The first one was looking at it from the company's point of view. Why would a company go into this? Well, it's a easier way to raise capital because the government has put some attractions there for investors. So in the next ESS Biz Brief, we included some material from an investor's point of view. And the last one's on sections and papers. And the ESS Biz Brief that we're currently preparing is on seminars and webinars. So we intend to work through every component of ESS BizTools and produce a small brief for you. So I'm now going to take you onto the website and show you the location of some of these matters that we've been referring to. If you've got any questions, you can type them into your system now, into your computer, and I'll review them shortly. But if not, please send me an email after you've watched this webinar and we will get back to you. So I'm now in the members area of ESS BizTools. The ESS Biz Briefs that I just mentioned are located there, and you have an article, sections and papers, early stage innovation companies, etc. And if you want to read the material, just click on continue reading. And you have a video, and then you've got a short article just alerting you that this product exists within the system that you might be able to utilize. I'm just going to quickly now go through some of the other matters that I referred to in the webinar. The Business Advisory Services introduction. So we just go to the member product menu. There's the preamble on the Business Advisory Services. This is the training material to help you get ready. And then you've got the 11 modules that comprise the training material. So those modules are an introduction, getting organized, offering business advisory, team training, leadership, marketing strategies, review of products or services, the use of the SME analysis, selection of products to be offered, planning seminar to launch business advisory services, selling business advisory services, implementation. That's the big challenge, to be able to implement, and then one-on-one meetings talking to your clients. So that's where that material is. You just click on download a course and you will get access to it all. The next item that I want to talk to you about is the budgets and cash flow forecasts. This is where we got the retail price calculator, the trades charge out rate calculator, and the professional fees charge out rates. So there's a whole range of material there that you would normally click on to the procedure control form, and then you would get access to that. And the key forms, I'm just going to bring up one of them, the setting retail price calculator. So there's some instructions. And then it moves into a calculation of labour on cost. Whereby you can put in different classifications, the calculation of the labour budget, the budgeted overhead expenses, which you would insert, the financial analysis, which is looking at how much is invested in this business, what's the desired rate of return, what's the projected gross profit, and the system will do that for you. There is then some calculations on the sales mix strategy, whereby you list products, their purchase price, current markup percentages, calculate what the sales would be, look at the gross profits, and then decide whether that is going to cover your overhead expenses, your labour, and what sort of profit are you going to make, and how does that line up with the targeted profit. So that's what that material is about. It's to help you to sit down and have some discussions with your client. There are an additional 2 sets of calculations there to enable you to undertake some what-if type calculations for your clients. Very important. A lot of retailers really don't know what they're doing. Obviously, within a retail store, there's a whole range of different products and different product markups applicable. The next area I want to look at is business planning. So you just click on business planning. There's a whole range of material within business planning, and then you'd click on to download the content. And the debtors management training, early stage innovation company, personal property securities register due diligence system. And I'm going to click on form 1645 because it's, I think, the most important form in the personal property securities register system. So this is the form that you would complete with your client, trying to identify where all their assets were last night. So there's a whole range of assets that a business could have. And obviously in a system like ours, we include all of them. Some of them will not apply, but we start off by looking at where's the stock, and we've broken it down quite deliberately so as to prompt the client. Some people call things different names. They forget they got consignment stock or demonstration stock. And if these things are only worth a few $100s, then probably not worthwhile worrying about from a personal property securities register point of view, but they might be worth a lot more. And we're raising the question, do they have a current legally prepared terms of trade agreement and retention of title agreement? Very important. Then we go into livestock and so on. This document takes you through the whole process of looking at where the assets were last night, what's happened to them, so that you can then have what might be a difficult conversation with your client in telling them that they are very much at risk. They wouldn't dare run their businesses without having insurance policies, and yet they might be in a very difficult position. I'll just show you the SME Debtor Systems Manual. So it's just a matter of clicking on again. Now this is a template that after conducting the debtors review, you can edit it to give your clients a customized debtors system manual. And the helicopter's going overhead here, not in your office. So this is a template of the SME Debtor Systems Manual. You'd put on there, prepared by your firm, name of your client. It's a fairly comprehensive document because we've prepared this so it can be utilised by accountants like you all over Australia. So some of it you may want to eliminate. You may want to edit. That's okay. But the whole purpose of this is if you're able to supply to your client, for a fee of course, a debtor systems manual that has been customised to suit their business, that the person who has the responsibility of debtors has got some written guidelines instead of notes stuck to the edges of computers and verbal instructions handed down from I don't know how many people at times. Your client internally would have a written system to guide the person, because debtors can be a very big amount of money, an asset for a business, but it takes a lot of control. So just going back to our slides now, we've talked about ESS BizBrief. In future editions of Differentiating Your Business, which we prepare for our subscribers to ESS BizTools and ESS BizGrants, we will examine each of the product packages that we've referred to today and to the ones we haven't referred to in more detail, so as to give you a few tips on how you might utilize the product and for the clients that you're working with. If you've got any inquiries, questions, comments, or criticisms, please don't hesitate to contact us. Just send me an email or telephone me on 1-800-232-088. Thank you for your support of ESS BizTools and ESS BizGrants. I should have checked to make sure we had no questions. We've got no questions. So thank you for participating. We'll talk to you again in a month's time when we present the next webinar in the series, Differentiating Your Firm. Good luck with this challenge in 2018-19. Have a great day. Goodbye.